This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, June 5th, 2015. Euro dollar. So an impressive run for the euro this week, with the recovery rally extending up all the way to 1380 ahead of the latest pullback. But again, with the market still holding below the previous high that we saw back on the 15th of May at 1467, the downtrend remains firmly intact, and we could be seeing another lower top ahead of the next major downside extension back towards and eventually below the recent lows at 108.20. At this point, only a break back above the recent high that we saw this week at 1380 would take the pressure off the downside, while a break above 1467, that May 15th high, would be required to delay the structure and put the pressure on the top side. Sterling dollar. So the cable remains locked within a well-defined downtrend, with recent rallies being very well capped ahead of 155, and the market is poised for fresh downside back below recent lows at 151.70 and towards more critical support at 50.89 further down. At this point, it looks like a firm lower top is in place by the fresh recent 2015 high at 158.15, and again, only back above 155 would compromise this outlook. Dollar yen. So dollar yen did a good job of stalling out after the market put in a bearish outside day formation earlier this week on Tuesday, but that bearish outside day formation has really only done a good job of preventing the market from rallying to fresh highs, with setbacks being well supported as this firm uptrend continues to push to the top side and want to break to fresh highs beyond 125 and into the 130 area further up. At this point, deeper setbacks should be seen if the market breaks below recent lows that we saw at 123.75, but until then, the pressure remains on the top side for fresh upside. Ultimately, if we do see any deeper setbacks below 123.75, they're expected to be very well supported by previous resistance now turned support at 122. Euro Swiss. So a significant break in Euro Swiss this week, with the market taking out key resistance going back to the 30th of April at 105.25, and this should pave the way for a fresh upside extension towards the February peak at 108.15. Look for any setbacks to now be very well supported ahead of 104, while ultimately only back below 102.35 would compromise the recovery outlook in Euro Swiss. Aussie dollar. So Aussie has been locked within a bearish consolidation over the past several weeks, with the market looking like it wants to head lower to take out the recent multi-year and yearly low at 75.33 and head down towards that next major downside extension towards the 70 area further down. At this point, any rally should be very well capped ahead of 80, while ultimately only back above 81.63 would compromise the bearish outlook for the Australian dollar. Dollar CAD. So dollar CAD looks to have firmly put in a higher low around the 119.20 area and is on pace for a retest of the recent 2015 high at 128.35. Look for a break above 128.35 to expose the 2009 peak at 130.65 further up, while any setbacks now should be very well capped or very well supported ahead of the 121.50 area. Kiwi dollar. So Kiwi remains locked within a well-defined downtrend after the market recently broke to fresh multi-month lows, taking out the previous base from this year at 71.76 and opening the door for the next major downside extension towards the 65 area further down. At this point, any rally should be very well capped ahead of 73, while ultimately only back above 77.44, way up there, would compromise the bearish outlook. SPX 500. So the S&P 500 continues to show signs of topping since posting recent record highs back on the 19th of May at 21.37, and the market has now broken back below 21 to put the pressure a little bit more on the downside. Still, we need to see a more acceleration to the downside and a retest of 2040 and a break of 2040 to really confirm the onset of a reversal in this market and potential medium-term top. Gold. So gold has fallen back down towards some key support, which comes in around 1170, and the market should remain supported above this level with a medium-term or longer-term base sought out off those 2014 lows around the 1130 area. At this point, only a close below 1170 would compromise the recovery outlook and the basing outlook for this market, while a push back above recent highs at 1232 would do a good job of strengthening the basing outlook and open an acceleration up towards the 1300 area. But for today, keep an eye on 1170. A close above 1170 will keep that basing outlook intact, while a close back below 1170 would give reason for concern and potentially expose a retest of that 2014 low at 1130.